You're on Zillow looking for properties and you find the perfect property and you're planning on going to its open house. But if you want to show the buyer that you're serious, you're going to have to come with the pre-approval letter. What's up, you guys? My name is Antoine and welcome to my channel where I like to talk about things like real estate, investing, and lifelong learning. And if that sounds good to you, be sure to hit the subscribe button down below and turn on the bell notifications. And in this video, I'm going to go through what you need in order to get pre-approved for a mortgage. But first, let's start with what is a pre-approval letter. And basically, a pre-approval letter is a letter from your lender stating that you have the income and you are able to finance a property at whatever amount that you get it for. Things that are typically on the pre-approval letter itself are like the loan type, the loan terms, the loan program, the amount, and the purchase price, as well as how long the pre-approval letter will last. But the main thing out of all this that you should be concerned about is the interest rate. Sometimes the lender doesn't put it on the pre-approval letter just because it varies so much, but you should at least ask the lender to see how much they're planning on giving you. As of 2021, under 3% is kind of the norm, and when you factor 2% every year due to inflation, that's some very cheap money you're able to borrow. Now, when you're talking to all different types of lenders, it gives you the opportunity to see all the different loan options that are out there, as well as down payment assistance programs. And you can also discuss with your lender how much that they think it's going to cost to close on the property. And by knowing how much you need as a down payment as well as closing costs, it gives you a better idea of how much money you need to have in your bank. So the 5 things you're going to need in order to be able to be pre-approved for a mortgage are your income and assets, good credit, employment verification, and some identification. But the most important thing that you need in order to get this pre-approval is to press the like button down below for the YouTube algorithm. Anyways, typically the lender will have some sort of portal where you can upload all this documentation to, and after doing it a couple times, hopefully that you have all this information kind of stashed away on a drive safely or somewhere on your laptop. That way you don't have to go digging for it. So for proof of income, typically you would send them your W-2 for the past couple years, as well as a couple recent pay stubs to kind of verify that you are making the money that you said you were. If you're self-employed, you could show your 1099, or you could try to show them your tax returns to kind of give them a better picture of how much money you're actually making from your business. Now, for proof of assets, you'll need things like bank statements as well as your investment account statements, and Robinhood and Webull and platforms like this make it really easy to get your monthly statement to kind of show you how much you have invested with them. But the thing with monthly statements is that you could have put a bunch of money into an investment account and it's not going to show until next month's statements, so definitely let your lender know that, hey, there's actually, X amount of money in this account and not what it shows. So you're going to have solid credit in order to get pre-approved for a mortgage, and typically they'll be able to do anything above a 620 credit score, but if you want the best interest rate, you're going to have above a 760 credit score. But if you're working on your credit score and you're trying to get it above 760, I already made a video about how to boost your credit score, and I'll leave that down the link below. But don't lose hope just yet if your credit score is not up to par, because the FHA does have guidelines regarding a 580 or higher credit score. So if you fall in that threshold, you can still buy a property. The only thing is that the interest rate will be a little bit higher, but that's something you could refinance down the line. So your lender also has to make sure that you didn't just get fired at your job, so there is employment verification. So in addition to your pay stub, chances are the lender will call your employer and ask them to verify that you still work there, as well as how much you make. And if you recently just changed jobs, they may even go as far as to call a previous employer. If you're self-employed, this portion is going to take a lot more documentation, mainly because the lender has to verify the stability of your income. Now, the last thing you're going to need before you get pre-approved for a mortgage is some identification. Your lender's going to want to make sure you are who you say you are. So they'll be looking for things like your driver's license as well as your social security number, which they'll be using to run credit reports. And if you are getting multiple lenders, that means that they all are inquiring about your credit, but your credit score is not going to take a beating, because it's all going to be grouped together. So having all that information prepared can help you get a pre-approval so you can start putting offers in on homes. It varies by lender, but for the most part, it only takes about 1 to 3 days for them to actually take all this documentation and give you a pre-approval letter. Also, another thing to consider is that your lender also takes into consideration your debt to income ratio, which is exactly what it sounds. It's all your debts ratioed to your income. So things like credit card payments, car payments, student loan payments, all these things that you have to pay compared to your income. So if you have all these debts, it's definitely worth considering how much that they're lending you and making sure that that monthly payment is something you're comfortable with and not just something you can afford. Now, if you're purchasing a multifamily home, you can also use your tenant's rental income to add to your monthly income. And for me, this recently came into play because my lender wanted me to have under 50% of my monthly income be going towards my mortgage. So with any amount of rental income, I can easily make that. That way they can make sure that you don't default on your payment. Now, what I basically described was house hacking, and if that's something that you'd be interested in, I've already made a video on it, and I'll leave that down in the description below. As always, you guys, thanks for watching. Be sure to share this video with someone you know that may be looking to buy a property, as well as comment below if you had any questions on anything that I mentioned in the video, and be sure to give this video a like. That way you can help me help the YouTube algorithm push this video. And I'll see you guys in the next one.